Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's the 21st of September, 2023, and yet again, another big show for you. We've put together some of the best interviews of all the guests we sat down with last week at the Future Proof Conference. We have four amazing people sitting down with us here today. And we're going to take a look into the minds of some brilliant people. I mean, these are people that are the names of finance and names in crypto, and even an entrepreneur who sold her business for $300 million. We're going to have Nick Maggiulli. He is an author that has been on the show before. We're also, again, as I mentioned, Alli Webb. She's a founder of Drybar. We're going to get inside her entrepreneurial mind. We'll also get the latest on inflation, the Fed, and investment opportunities with the former head of Ray Dalio's investment team, Bob Elliott. But first, we sat down with my good friend, a friend of the show, somebody who's been on here a few times in the past, and that's Matt Hougan. He's going to share his insights into development in the crypto space. We're also going to talk about the long-awaited, eagerly awaited spot Bitcoin ETF, and also Matt's new six-figure price target for Bitcoin. All those interviews and more coming up right now on Making Money. NVIDIA may be America's top performing stock after more than doubling this year alone. But if you're holding NVIDIA or thinking of buying it to get a stake in the $7 trillion AI market, you're going to want to see Mark Chaikin's new AI prediction first. Mark is a regular in many news outlets from Fox Business to CNBC and built the stock indicator Wall Street uses to find winning stocks. His award-winning system flashed buy on Tesla before it climbed 335%, Moderna before it climbed 300%, and Riot Blockchain before it climbed 10,090%. It also found NVIDIA at the start of 2023 before its massive bull run. But right now, Mark is stepping forward to warn people to stay away from NVIDIA. My system has indicated that NVIDIA is no longer the best stock to buy to profit from AI, is what Mark says. In fact, it just flashed buy on a totally different AI stock. And today, he'd like to hand you the name and ticker symbol of his number one AI stock to buy right now. For a limited time, you can get this information for free at www.aifrenzy23.com. Again, that's aifrenzy23.com for a free copy of his new report. Thanks for joining us. We're here again at Future Proof out in Huntington Beach, joined by a good friend of mine, Matt Hougan, CIO of Bitwise Asset Management. Matt, great to see you in person. It's been a while since we sat down. Let's just jump right into it. Obviously, the news around Bitcoin and cryptos has been nonstop as of late. You know, the court ruling came out and basically told the SEC they have to look at, again, the ETFs, the spot ETFs out there. And I know Bitwise has one in with the SEC. So what's your view after seeing what's happened recently?
Yeah, obviously, it's great to be here, first of all.
You.
Great to see you. I can't talk about the Bitwise filing, but I can talk broadly about what I'm seeing. I think we have the best shot yet of getting a spot Bitcoin ETF, and there are probably at least three reasons why. Reason one, you've seen some really big names come into the space.
Yeah.
Bitwise is great, but it's also great when BlackRock comes into the space and says, we want an ETF. That's a huge endorsement. Number two was that lawsuit you mentioned, SEC versus Grayscale, which the court found that the SEC couldn't reject ETFs on concerns about market manipulation, since they had already approved futures ETFs. And if you're going to allow those, you should allow these. And then the third, which people don't talk about, is just the market's gotten better. I mean, you and I have been following crypto for a long time. It really was the Wild West a decade ago, right? But the regulation has improved things. The quality of trading and liquidity has improved things. I think you add those together and we have our best shot yet. I think it's a good shot as well.
I'm happy to hear you say that, because I think when we sat down maybe 4 or 5 months ago, I think you weren't as positive of it being approved. Not to say you were wrong, but I'm just saying you weren't as positive.
Yeah, my mind has changed. My mind has really shifted. You're absolutely right. I said that Bitwise wouldn't file until we thought one would be approved. Obviously now we filed, so we think one can. Yeah, but there's really been a game changer. The Grayscale ruling was sort of a shot out of the blue. We didn't know which way that would go. That was a big deal. BlackRock came in with a novel approach of having surveillance of the underlying markets. That was really clever. So yeah, I've gone from, a glass that's half empty to one that's more than half full.
It's funny because I think, if I may mess it up, but I think BlackRock only had one ETF application ever rejected, or something like that.
That's right.
So they know what they're doing, right? They're
Pretty good.
You know, you got to follow the money, the big money when it comes to that.
Heavyweight style record.
So we saw Bitcoin after that court ruling came out, the grayscale ruling shot up from like 28,000 to close to 30,000 and right back down.
Yeah.
It was a very, you know, and that, you know, I'm a long-term bull of crypto, but that concerned me, the fact that rally couldn't hold. Is that the fact that there's just not a lot of liquidity out there right now?
There's not a lot of liquidity, and it's just really quiet in crypto. Everyone's sort of waiting for this event to catalyze the mainstream era of crypto, right? They're waiting for this, and there aren't a lot of catalysts out there. And so, yeah, it fizzled as fast as it went up. I will say I have a thought about what's going to happen if we get a spot Bitcoin ETF.
Well, let's hear it.
I think people are going to overestimate the short-term impact and underestimate the long-term impact. There's so much hype around this that I bet the market will get really excited in anticipation. And then you might even see a sell the news event on the day that it goes live. That's what we see if you look back in history. But over 2 or 3 or 5 years, I think it's hard to overstate how important it's going to be.
I agree. You know, I've used that similar analogy when it comes to artificial intelligence. You know, NVIDIA, all these stocks run up so much. So you overestimate in the near term, but you underestimate the long-term effect of this. And I think that's what we're seeing with AI right now. So I think the exact same thing is going to happen with Bitcoin and cryptos, because we're going to start seeing build into the halving next year, which is typically positive heading into next year. So it's strange how quiet it is, because we went from the Wild West to like literally sitting on the beach and chilling.
That
the
is
beach
exactly
right next to us
right.
here. You know, it's like we went from, it's like, where's the middle ground here?
There is no middle ground in crypto. It's always at the extremes. Yeah, but you know, if you look at crypto historically, it moves in these 4-year cycles. And there's a bear market year, and then there's a year where the market goes up a little bit, but people don't notice it, right? That was 2019 before the big boom days of 2020 and 2021. That was 2016 and 2015 before we got the 2017 explosion. We're in that again. The market's doing great. Bitcoin's up 50% plus this year. Most investors would take that, but it's not the level of excitement people expect. I think that's coming down the road, but yeah, you got to hold out a little bit.
It's funny you mentioned Bitcoin's at 50% this year. Like, let's let that sink in, folks. Bitcoin's at 50%, because if you ask the lay person, the average person, how's Bitcoin doing this year? Oh, it's getting killed. Most people will think it's getting killed for whatever reason, this mentality, because it did pull back, you know, from the highs earlier this year. But man, you're right. It's been the best performing asset class out there. Again,
in the world.
How many times does that happen? Like, it's over and over. It keeps happening.
That's right.
And eventually, you know, we're going to realize that. So what is your big picture price target then on Bitcoin?
On Bitcoin, you know, we think Bitcoin will be in the $100,000 plus range by the end of this cycle, and maybe significantly higher.
And when you say cycle, is that this 4-year cycle?
Yeah, this 4-year cycle. So this was year 1. I think in the next 2 years, we're going to certainly set, I expect, not a prediction, not advice, but I expect us to set new all-time highs, and I expect it to be in the 6-figure range. But we'll see.
Once again, thanks to Matt Hougan. Always a great have him on the show. And as I've talked about many times, Matt and I have known each other in this business for probably over 15 years at this point. And you know, what he's done in the crypto industry is pretty amazing. And it's nice to get, you know, something that's bullish, because everything's so bearish out there. So to get a nice bullish view, and honestly, it's a realistic view from Matt. So great having him on the show. Also during the conference, I had the chance to sit down with another familiar face to our show. And that's the author and COO of Ritzholtz Wealth Management. And that's Nick Maggiulli. You might recall our previous conversation Nick and I had. We really delved into his book, Just Keep Buying, a book that I mentioned on the show that time. I say it again today. It is a must read for individual investors. You know, over the last 2 years or so, probably one of my top 10 books. It's really easy read. And once you read this, you realize how long-term investing has been the greatest wealth creator for the average American since the beginning of this country. But what's great about the interview you're about to hear, we were able to take all the stuff that he talks about in that book, and we relate it to current market trends, both stock and bond market, and the way the market's been performing. We also have to ask Nick about this. What are the implications of artificial intelligence, especially in the workforce? Nick delves into all that and more right now. So I want to say you did a great job. And I think any individual investor should read this, because there's too many investors out there right now that call themselves long-term investors that are trying to trade this market. Mm-hmm. And I think reading your book, you realize long-term investing actually works.
Yeah, and it does over the long haul. I mean, the thesis I have is like an 80-20, 80% stock, 20%, let's just say U.S. bond in this case. And stock can mean whatever you want. I'm thinking global equities, global stocks. That portfolio is going to return somewhere on 3 to 4% real returns over the next 30 years. Remember, that's real. It's after inflation and everything. And that might not seem like a lot, but that's not super high risk. And 4% of your real is, I mean, you're saying, well, that's not a lot. I want 10% returns. Like, That's tough to get. The U.S. stock market has done that nominally. Real terms has only been about 7%, but to get that over a 30-year period is very tough. And I don't know if we can expect that going forward. So I'm like, I think 4% real is great, and if you do that over 30 years, that's a decent amount of growth you can get in your portfolio.
So let me ask you, so say things do change, say it's 2030. I heard somebody talk, they exploded question, what was 10 years from now? AI is going to change the world. Say we get quantum computing next 10 years, things are going to be very different. We probably can't picture what's going to be like in 10 years. Would you then shift that if that was possible? You'd say, listen, it's too aggressive right now, or be more aggressive with equities. Is that something that you would look at and reevaluate, or is this something that you want to stick with for the long term?
I mean, I guess the argument with AI, at least my understanding of it, maybe I'm wrong on this, we can get into this, is like, it's like about automation. It's getting rid of jobs. And I don't think it's going to get rid of jobs. It's going to get rid of some jobs, obviously, but I think it's going to also empower people to do completely new things and do things better than they ever did before. It's like, machines can beat people at certain things. People can beat machines at certain things, but people plus machines are the best of both worlds. And so I think we're going to see that take off. And so I think there's going to be a lot of returns to capital with AI. I think there's a lot of potential there. And we're already starting to see some of that, like obviously NVIDIA and all this stuff's going up. And that could be speculative. I'm not here to say whether it's not. But if all these things come to pass, like, yes, NVIDIA could end up being like one of the most valuable companies in the world. And it's already kind of moving in that direction, right? So obviously it's speculative. We don't know. I'm not making that a prediction on giving a buy rating or anything, like just for the record. But it's one of those things where, like, I don't know what's going to happen. I think if I had to bet, I would say the returns to capital would be better than the returns to labor over the next 10 years. But I don't know. Maybe I'm wrong. And so we'll have to wait. So
you'll adapt with as the economy and market changes.
You have to. Same with bond. Like you can say, like, for example, when I was writing Just Keep Buying, inflation had been 2% or below and even as the data I was getting in 2020, remember all my data is to the end of 2020. Everything I was writing about, I did discuss inflation briefly, but I couldn't see a world. I mean, I wasn't imagining a world of 4 or 5% inflation. And it's literally as soon as the book's published, inflation's now through the roof. And it's like, it's hard to know what's going to happen. So you have to be adaptable for that. And so I think that's the thing to keep in mind is like, yes, this is a great playbook, but like be adaptable. Understand as bond yields change, your allocations are going to change, your decisions, all these things are going to happen.
And I agree with you with AI. I kind of look back at other innovations over the last 40 or 50 years. Everybody always thought that was the end. It's going to take away all the jobs. And it ends up creating a lot more jobs. Like it ends up creating, like I said, and it really could enhance productivity for people that were stuck pulling levers forever. Now they can do something else, and so I'm actually optimistic on it. I think it's going to be good for the world. And most people don't agree with that, I don't think. Once again, I thank Nick for sitting down with us here for the second time. He was a busy man this week out in Future Proof as he was part of the company putting it on. So he was running around. So I want to thank Nick for his time. And again, don't forget to get out there and get his book, Just Keep Buying. Next, we'll sit down with Bob Elliott. He's a chief investment officer at Unlimited Funds. Bob and I are going to talk big picture stuff, everything from the Fed to a potential recession that's looming. Bob really likes to look at the shifting financial landscape, explains where investors can find opportunities, even though we've had these inflation numbers and we've had the Fed all over the place as of late. But more importantly, he identifies this one under the radar sector that many of us overlook, and as he says, is currently mispriced by the masses. To me, I think the Fed should pause. I think they did what they did. Now let it play out, like you said. I think you have to let the markets kind of play out at this point. I mean, I don't think another 25 basis points is going to change the world.
It's not. I mean, if anything, the reality is they're learning that the short end of the curve, a tightening of the short end of the curve, just doesn't have that much of an impact on the economy. So, what they really should be doing, because they need to because we have an asset price problem. That's the problem we have is, household wealth just hit new highs, right? In terms of a report. So we have an asset price problem. Assets are too high, which is creating too much demand. Ideally, what they would do is they'd go and use the QT lever more aggressively. Now, there's a bunch of reasons why they're not doing that, and they're not going to change their use of QT anytime soon. They're going to continue to have the $95 billion cap. And so what that really results in is they've got to get a market-based tightening, which is that long end tightening that starts to bring, higher interest rates, higher risk-free interest rates will affect all asset prices. And so if you get that rise, you start to bring all asset prices down, and that starts to create that self-reinforcing dynamic.
Kind of resets a cycle there where we should be.
Exactly.
Are you long-term, short-term? What are you looking at where we see opportunities at right now?
Yeah, well, I think it's going to be a pretty tough time for a lot of investors because we're kind of, in many ways, going back to a bit of the dynamic that we saw in 2022, which is an environment where maybe both stocks and bonds don't do very well. right?
Which that was an outlier. That was one of the worst years for 60/40 in the last century. That was like,
that's right. It was a real surprise in terms of the magnitude of the tightening. People were very much taken by surprise on that. And I think the problem is we're set up for a similar style surprise in late 23 and early 24. And that's because you have so much expectations of earnings growth in the stock market that will be challenging to achieve.
Yeah.
And at the same time, you already have interest rate cuts priced into the bond market, given the meaningfully inverted yield curve. And so it's easy to have disappointment on both fronts.
Yeah.
Right? Where stocks earnings don't come in like expectations, and the Fed doesn't cut quite as fast as people expect. I think the one area that's a bit mispriced, and we're seeing it price in over and over, more and more, is the commodity complex, right? Which has been very soft, for much of the year, where, you get a little bit of tightening in the commodity complex, and you start to get those prices to rise. Yeah. And if anything, that's the thing that will really hurt the 60/40 in addition, because it just makes the Fed's dynamics more challenging. So you put that together, 60/40, very tough environment for 60/40. So you got to look outside that, whether it's to commodities, gold, and maybe alpha, right?
Sure.
Looking for active management to help navigate through this challenging market environment.
I agree with commodities. I'm underexposed personally, but I think there's some great opportunity there. And you look at like copper, for example. I mean, the amount of copper that's going to be needed for renewable energy, electric vehicles, the supply is not there.
That's right.
If you do the math, it's just not there.
And tactically, what you're seeing is those markets are in tight supply. You're seeing inventories being drawn down. So you are seeing sort of tactical dynamics that look good for those markets at the time when you're also seeing these more strategic environments that are positive for the commodity.
Yeah, I think it's just patience. You got to sit on those and let that play out.
That's right. Like anything, it's about creating a diversified set of positions, and particularly looking for things that maybe they're not sure things, but they're sort of tilted and skewed in your direction, particularly in the event, that you try and get a couple of bets that are on both sides of whether growth is better than outcome expectations or worse than expectations. And so that's why I kind of like, the long commodity positions with maybe underweight stocks, underweight bonds.
Because if the economy does well, copper is going to do well, and the commodities will go up.
Exactly. So you want to just really find those those lowly correlated or zero correlated positions, and where you just have a little bit of edge, where it's more likely than not that it goes in your direction.
I'd like to thank Bob again for sitting down with us. It's great. Sometimes the guests and I don't see eye to eye in the big picture, even the short term, but it's always good to get different views. So it's great to have Bob on here and share his views. Finally, I had a pleasure sitting down with what I'd call a serial entrepreneur, Alli Webb. She takes us through her journey of conceiving a business, building a business, and ultimately selling her business, Dry Bar, which is a chain of salons that really transformed the hair industry, by drying your hair. Plus, she's going to unveil her latest app-based project into an industry that might surprise you. She also offers up tons of wisdom of how she sustains her commitment to transforming that customer experience. She also talks about her new book that's coming out just in time for the holiday season. I got to tell you, folks, this interview is a must-watch for any aspiring entrepreneurs or anybody who just loves to hear about success and optimism, and maybe they visited Dry Bar at some point. Coming up now, Alli Webb.
So it was this massive hole in the market that we almost inadvertently stumbled upon.
You know what's amazing, a business like this is, you look now and well, of course we needed that, right?
Yeah.
But at the time,
hindsight.
you went out on your own. That easily could have failed.
And by the way, everybody was like, what? A lot of people would say to me, I had this idea, but I didn't think it would work, and I didn't either, because I was at $35, how many blowouts? Because we got to do how many blowouts an hour to make this work? And
you got to cover your rent, got to cover your employees, all the expenses.
It was a break-even model, truly, when we started. And that was because we were estimating doing 30 or 40 blowouts a day in our first 8-chair shop in Brentwood. And we were doing 60 to 70 a day. Wow. So it was it was just killing it. And that every store, some of the stores took time to ramp. And, I want to be genuine about that. It didn't just happen like that. It took work and marketing and all that. But eventually, once the stores fully ramped, we had stores that were doing, almost 200 blowouts a day.
But at what point did you kind of hit that critical mass where it became known as a brand? You know, obviously, if you're one store, it's not known on the other side of the country. At what point did it become that national brand?
Well, we definitely started to create buzz in LA because that's where we started, and we were.
And of course, if you want buzz from anywhere, you want it from LA,
you want it
right?
from LA, and you know, we happened to live here, and it was perfect. And we opened the first one in Brentwood, and then it was like that got too busy, so we had to open the second one, which was in Studio City, and then in West Hollywood, and then we did Fashion Island, and so we were kind of just starting to more cluster. And we realized, you know, if we're going to really grow this thing, we have to like go beyond just LA. And so we went to New York. Actually, we franchised at that point, and we kind of went back and forth on franchising, but we franchised in Dallas, which, you know, got us more on the map. We franchised Arizona. And so we were franchising more and more cities because we couldn't do them ourselves that fast. You know, I mean, between the money we needed to raise and all the things that we had to do to like open stores, we could only go so fast. And then we were like, okay, we got to go to New York. Like, we have to go to New York because that's the other place that's going to really, you know. And so New York was a tough market because, again, this was 2010. And a lot of the beauty editors were like, you know, there was a place called Blow at the time. And Blow was like a full service salon, but like started out as Blowouts. I think they didn't make that. Don't quote me on this, but I don't know that they made that model work. And the editors were like, we have a blow dry bar. I was like, no, you don't. You don't have dry bar. And then once they experienced it, they were like, you're right. Like, this place is amazing. That's awesome. And we got so much press, you know, because we were a brand new concept. And we had, you know, I tell people all the time that I think PR is incredibly important to any company, no matter what kind of PR it is or marketing. But we did have the luxury of being like a brand new concept, and a brand new concept gets a lot of attention. But we didn't invent blowouts. We just invented a better experience around them.
So let's talk about the future. I know you have a new book coming out.
Yes.
And then you also have the massage.
Squeeze.
Chain. Squeeze.
Squeeze. So Squeeze was very similar to what I explained about Dry Bar and the two bad choices. It was like the same things, the discount massage places, you know them, or like, you know, the high-end spas where you're overpaying, and the discount, you know, it's like just not a great experience. So we wanted to create something in the middle again. And it was really my brother's brainchild, and we brought in the whole founding team of Dry Bar. And the big difference of Squeeze is, you know, it looks really cool and amazing and lots of bells and whistles when you're in there, but you book on an app. So you book and tip and pay on an app, and it's very customizable to like body parts that you like and the pressure you like. So you walk in, you get a massage, and then when you're done, you just walk out, just like you would walk out of an Uber. Like you don't pay at the front desk. And, you know, there's a lot of things like that we created around as big massage goers. We're like, you know, we wish this happened. We wish this happened. And I wish I didn't have to tell them every single thing I like every single time. So it's all like kept in an iPad, all of your preferences and anything that changes. So it was really something that was also needed. And we decided to do a completely franchise model. We've sold like 80 locations already.
Congratulations.
So it's on its way up, and it's exciting.
So, you know, it sounds like you take businesses and just make them a little bit better.
Create an experience.
Exactly. Yeah, you took it. Like, obviously, most people get massages, but it's the worst experience for me because I travel all the time and trying to find somebody that I know and trust.
But that's the thing. It's like when Squeeze takes over the world, it's like you can go on your app and you can see, or the country maybe. You know, a little ambitious. You can see where there's a Squeeze, and you can read reviews of the therapist. You can read what other people wrote, so you know. Because even I sometimes go on because I don't know all the therapists, and I'm like, oh, she's more of a Swedish massage. Like I like deep tissue, so I'm not going to go to her. You know what I mean? So you know.
I need that because I like to just be rubbed. I don't like being kneaded because my body needs it so bad. It hurts so bad, so it really bothers me. So I like just kind of pat me like a
I hate that.
That's all
no,
I need.
No way.
I'm good with that.
That's so funny.
So before I let you go, tell us about the book that's coming out.
It's called The Messy Truth, which is like, you know, pretty explains itself. You know, it's really just like my entrepreneurial journey of, you know, how I started and how I got my start. And, you know, I'm not your like typical entrepreneur. I didn't go to college. I don't have a business degree. I didn't really have like any real like right to be doing this necessarily, but I knew the salon business. I knew the, you know, blowouts and how to do that. And I brought in my brother, who was more of the business side of things, who really taught me so much as we went. And now I feel like I've gotten like a business degree, and you know, because they
can never get anywhere else.
You know, but so the book is really like a culmination of all of how it all went, like the things that worked, the things that didn't, and like the messiness of all of it, you know, and then raising a family. And I have a son who went to rehab, and I went through a divorce, and like everything that like could have gone wrong practically did. And, you know, my mom died. I mean, it was like, you know, there was.
But it's a great story. It's because, you know, entrepreneurs, you know, I've sold several businesses, some that went to zero, obviously. They all hit.
Never know.
But, you know, all people see is, oh, you started it and you sold it for this amount of money. That journey doesn't go like this. It is the most up and down.
It's messy.
Yeah,
it's just the whole thing is really messy. And there's incredible highs, but there's incredible lows, you know, and like self-identity and, you know, it's like for me having sold Dry Bar and like now not being attached to Dry Bar is like very strange. And like, I'm trying to figure out who I am.
It's still like your child though, right?
Yeah.
Like,
But you know, it's funny because I literally just took a kid to college, but like I still talk to that kid and see that kid. Yeah. I don't really talk to Dry Bar anymore. You know, I mean, it'll always be my baby, but it's just like, it's a detachment, you know?
Yeah.
And so the book really, I go into detail on all of that stuff and lessons I learned and things that worked and things that didn't work. So I think it'll serve entrepreneurs, and I think it's a good read. You know, there's definitely a good amount of drama.
I love, you know, stories because
it's a real story.
And I think most entrepreneurs that read it can probably relate and be like, shake their head. You know, I dealt with this.
100%. There's a little something for everybody, for sure.
Exactly. Yeah. So I'm glad you're sharing that. Thank you so much for sitting down. And when's the book come out?
November 14th. It's pre-order right now.
All right, holiday season. Get out there and get it.
Good
Alli Webb, thank you so much.
Thanks for having me.
New York Times bestseller, founder of Dry Bar, founder of Squeeze, and all around great entrepreneur in my mind. But thanks so much for joining us. Again, this is Making Money, coming to you live from Future Proof. I'm Matt McCall.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.